So if you were meeting someone completely new, how would you introduce yourself and what you do, and maybe like the coolest things about your career?
My name is Shane Feldberg. I'm an entrepreneur, and I really like investing in companies and helping them scale. Um, my first foray into entrepreneurship was at a very young age, and I just caught the bug early. I would just do anything I can to, turn a dollar into two, turn a dollar into three, and it just became a way of life for me. And eventually, I helped build a company that achieved unicorn status. So I was kind of able to leverage that into starting a career in venture capital. Still fairly early in my career, but we've deployed over 30 million in AUM, and I think we have some really big stuff on the rise. So that's basically a very high level of me.
Well, that's awesome. Let's get into like the earliest years, because something that we like to do is not just understand the adulthood of people that we interview, but also understand a bit of the childhood. So before we started the recording, you mentioned eBay and turning a dollar into three. Tell us about some of those earliest experiences and what they were like for you.
Yeah, I was once on eBay. I signed up for an account, and I found a guy selling Ray-Ban sunglasses from China. They were fakes, and I noticed there was a huge appetite just amongst my friend group to buy these fakes. I'd buy them for like $10. I'd go to lowest price, the lowest shipping price first. I apologize if there's some background noise, by the way. And I'd buy them. I'd buy them for $10 a Ray-Ban. I'd sell them for $60. Everyone knew they were fake. I would never misrepresented them. But what ended up happening was it became such a big funnel. The manufacturer reached out and ended up saying, "Oh, like let me sell you these at bulk." So I'd buy 200, 300 of them at bulk, and I'd sell them to my friends, sell them to people, and then it kind of just took on its own life form. I started buying other stuff off this manufacturer in China and selling them on eBay, just other random products, household products. We ended up selling 60,000 units. I was like power seller on eBay at like the age of 13. I don't think I could get the money out. I think my father had to do it. It was a whole spiel. So that really gave me the bug of turning a dollar into three in entrepreneurship, and from there it just flourished. But that's basically really what gave me my start.
Well, that's amazing. And then from there on, obviously high school ends and college starts, and then, you're having these early experiences. What was that kind of trajectory like for you? You mentioned helping build a unicorn company. How did you get involved with that team? How did you,
Yeah.
find your way into that kind of business?
Yeah, so I did college, a good Canadian business school. Then I was in a sales/consulting role at a school. And while I was there, I had this like really bad concussion. And when you have a concussion, you get like identity crisis, like you really have to redefine your interests. And I didn't know what I wanted to do with my life. It was like at a critical juncture where I could go one way or the other. My girlfriend had just dumped me at a concussion. I was like, who am I? And I ended up getting recruited to join this company, Clearbanc. At the time, it was really early. There weren't that many employees, and I joined and was able to kind of leverage that role and learn a lot and meet the right people, and I was able to basically able to launch my career off the back of the success of that company. A few other things happened, but I was able to just get in front of the right people in Silicon Valley and able to launch an angel syndicate off the back of that, because my job was basically talking to founders all day and giving them debt at this company. Quite a few $100 million in debt. I was like a 25-year-old kid, like insane networking opportunity. By the end of it, I had a list of 5,000 entrepreneurs who all were check writers, all who wanted to support me. So looking back, it was an invaluable way to meet the right people. So I've ended up investing in and leading a lot of rounds through the connections I made at that company, and ended up like getting my first super angel or LP checks through that network, and eventually it just took off on like a life of its own. Clearbanc ended up executing secondaries at some crazy valuation to SoftBank. I wasn't really a part of that, but I was able to leverage it and ride the coattails of it and create my own brands.
For those of us that might not really know what Clearbanc did or what they were, could you give us like the brief intro on what their business model was?
Absolutely. It was basically a company that would use AI and connect to inalienable data sources like Plaid and stuff to basically underwrite e-commerce businesses and give them capital. So you connect all your data sources, and within 2 minutes you can get a few hundred K, and then you pay it back over 6 months. I think looking back, the fees were a little bit high, but also really easy and quick access to capital is also important to people. So at the time, it was quite revolutionary, especially when we were in the ZERP era and there was very low interest rates. Learned the hard way that it's very hard to scale debt-based companies in more of a bear market or a stagflation-based economy. But in a bull market, it's great. But anyways, very grateful to the founders of that company and my friends there because it kind of gave me the credibility to do what I'm doing now.
Mm-hmm. I want to briefly talk about maybe some non-obvious lessons you've learned. Like there's always like the obvious things people mention when it comes to their experiences with startups and what they have learned. But what are some maybe non-cliche, non-obvious things you learned in helping Clearbanc grow and become the giant company that it did?
Yeah, that's a really great question, man. I think the venture hype cycle is real. Like when everyone's talking about you, whether it's good or bad, you're going to be this ever-present like pink elephant. Like what do they do? How do they work? And it gives you like this mystique. So all like the signaling that's in venture capital. Oh, the tier one investors are in this, that. It actually does help because it gives you status in the industry, and that makes people want to work with you, want to take capital from you. Like I remember people were taking capital from us, even though our rates were worse than some of our competitors, just because they wanted to work with us. So that was interesting. Also, like these companies are very sexy on the outside, on the inside, they're usually a shit show. And it's just constant. Just a lot of. It's really hard to move quick and like do it in a scalable way. It's like that like stupid saying. It's like the rocket ship taking off while you're building it. But it is really true. Like a lot of the times we would make deals and then figure out how we would put the infrastructure in place to close that deal after it was closed. Just like a lot of being really nimble, being really fast. Yeah, I don't know if that's obvious or not, but I'll try to think of some more.
Absolutely. We have a lot of founders that listen to us, and you yourself you've got an understanding of both the founder side of things and being an entrepreneur and being an intrapreneur. And then you've also got an understanding of how these angels and investors and LPs and GPs think at big, funds. What would you say are some things that entrepreneurs and founders often get wrong when they're talking to investors and when they're, engaging in these conversations, whether it's raising a seed round or Series A? What are some assumptions that they make are wrong, and how can they do better when it comes to talking with investors and communicating with them?
Everyone loves a good story. When you're doing your pre-seed pitch, I think there needs to be a strong why as to why you're building what you're building and have a deep connection to it. Pre-seed deals, real pre-seed deals are usually pre-product, pre-revenue. So it's like a very much a bet and a gamble. And if you have a personal connection to what you're doing, and it's very clear that you're an industry expert that has some unfair advantage, I think that's how you raise your first round of capital. Basically anything you can do to show that you have an unfair advantage, whether that being an insider, industry expert, having investors on your cap table who have industry knowledge. So if you're building a fintech company and the Stripe founders or investors, maybe that's signal. But it's really hard to get your first checks in. I think it's very relationship based. Like for me, the GP-LP relationship, I raise money from family offices mainly, is all about trust. They know that I did the diligence and I did the work to make sure that this deal at least is up to our standards. And whether it does well or doesn't do well, they know I'm going to be honest throughout that whole process and keep them in the loop, because you're going to have winners and losers in this industry. Everyone does, but it's about being transparent. So I would also apply that to raising your first round of capital. Just be transparent and have a strong why. And then as you go later in the cycle, it becomes more metrics based, right? Series A, you want certain NDR stats. You want your burn rate to be a certain multiples. So the later down the chain, the more it becomes financial due diligence driven rather than mission and why. It's really hard to diligence a pre-seed deal. That's why all of our like top investors are telling us to take more swings, more runs at bat at the early stage, because you don't know who's going to be the winners and losers. That's ultimately what it comes down to.
So you mentioned the story. So when the founder has some kind of personal connection to whatever they're doing, that puts them in a position of being like an expert and really understanding what they're doing, and it gives them a personal why and ever the more incentive to make sure the company succeeds. What are some other signals that makes it clear, or at least is a very solid indicator that a team or an entrepreneur specifically is going to be able to progress and make it in the world of startups versus quit and, go work at a 9 to 5?
Yeah. So like, why do people like traction? Why do people look for traction? Because traction is execution, right? It means they can actually deliver on what they're saying. How do you qualitatively analyze what is traction on a super early stage deal? Sometimes it's so early you can't. But on the flip side, the earlier you get in, the more ownership you're going to get for less amounts of capital. So it's this tightrope of what is your what is your risk tolerance? So one way that you can look at that is look at the founder's history. I have a founder that I'm invested in. I love the guy. He's an amazing person. His name is Dan. He runs a company called Firestorm Labs. It's 3D printed drone technology. It's unbelievable to see how this stuff works. And I went to his 15,000 square foot facility in San Diego and actually saw how everything is working, and like the application of this technology in Ukraine. It's just unbelievable. Like I'm fully bought into these 3D printed drones. They're really expensive. One little piece breaks, you just snap it off, put a new piece back on, and they can print these they can basically ship these things called XLs to Poland, Ukraine, and they can print them on the battlefield for 1/10 of the cost of their biggest competitor. How the hell do you invest in something like that pre-seed when it's just an idea? Like, it makes zero sense to me. So we invested really early, not pre-seed, but seed. And the reason we did that is because I know he had an exit in this space prior, in the drone space for 9 figures. So he already has shown he can do it once. So like, it's really hard to invest in hard tech or like deep tech at the pre-seed level because it's pure speculation. So one way you can mitigate that risk is that the founder has already done it before. And now this company is killing it. I mean, Lockheed is involved, and they'll probably do a big round soon, maybe not. But I'm a big fan of them, and that's how we diligence that deal.
That is seriously awesome. Peter Thiel talks about being a contrarian and having contrarian opinions. It's a question he asks quite often. I always like to ask people if they have any, what are some contrarian things they tend to believe about startups, about investing? Do you have any of those types of opinions? What are some contrarian things that you personally believe?
I think the reason he's saying that is because by the time something is a trend, you're already too late. So like, if you're spotting the emergence of ChatGPT-like technology 2 years before it comes into trend, then you're a contrarian, right? But then when everyone else is doing it, you're just part of the pack, and you're probably overpaying, right? The valuations of those companies are really high. So it's really interesting. Like, if you're investing in contrarian deals, you're also going to probably have less competitors. Right now, fintech lending, very unsexy. VCs don't want to touch it. If you have founders who have access to cheap debt and understand what they're doing, lending companies can print money. That's literally what they do. If you think about it in a simple way, and if you're going to enter the market, chances are there aren't going to be that many competitors right now, because I guess 2018 to 2021, everyone was funding these companies. Debt was cheap. Everyone had a fintech lender. It was super hard to be competitive, and everyone lost money because they were so overpriced. Now, when you enter, you're getting in at a way lower valuation because no one else is doing it. And two, you probably won't have that many competitors because no one's funding them. Like I was left with a bad taste in my mouth because it was hard to scale the debt, but maybe there's founders out there who can lend at really great rates and win a huge part of the TAM. So that's the benefits of being a contrarian. And yeah, for that reason, I get it. Like, I get why he says that. But I think for me, like, just trying to spot trends before they become trends is also being a contrarian. We invested in a company called Vectara. Unbelievable founder. The guy sold the company to Yahoo. Then he started Cloudera. Pretty sure he coined the term data science. He sold Cloudera for $6 billion. He came to me. He's like, I'm doing this LLM thing. He told me this like 2.5 years ago. I was like, great. I know very little about this technology, but I know who you are and how much I respect you. So we did the diligence. We did the deal, and we ended up. I mean, it's still going. Like, it's still early stage, but very promising. What he's building with his technology. So having really good relationships with great operators who are industry experts, who those are the people who are going to be able to spot these trends before they become trends. So building that trust with them, that they know to come to you when they're doing their early incumbent rounds, like that's That's how you win in this game at the early stages. Yeah, I hope that kind of answers the questions.
Yeah, Shane, you've talked a lot about building relationships. You talked about how important trust is, especially in what you do, but you can extrapolate that out to the entire journey of an entrepreneur, really. And so if you were a young person today, I know you talked about how your experience at Clearbanc, that gave you a lot of credibility, which helped you build trust. If you're a young founder today, let's say you're maybe in college or in your early 20s, maybe late teens, and you want to build trust with these people that are way ahead of you, way more successful. What are some ways that you would go about doing that? I mean, you've invested in a lot of founders that you personally have that relationship with. How, other than being previously successful, how have they approached you in a way that's built trust, that's made you want to have that connection with them?
I mean, that's like the secret sauce, right? Like, some people can raise money and some people can't. Some people are analysts, some people aren't. Success is not final and failure is not fatal. It's the courage to continue that counts. That's that's like the Winston Churchill quote that always stuck with me. Like, you really have to pound the table, and like it's like the people who are going to bang on the table hard enough to make their dreams happen that will get there. Because when I started, I knew probably 30 people who wanted to be like emerging fund managers. Maybe 5 of them ended up becoming it, right? Everyone gave up. It was too hard. They couldn't raise money. So just being like relentlessly dedicated to your mission, while also having some semblance of like, okay, is this happening or not? So like if you see marginal improvements, I think you keep at it, and you keep going, right? So just being super dedicated and passionate and like not giving up. People will see that passion and they'll write checks and they'll believe in you. Don't have blind confidence. Come prepared. Always be gracious, but you'll network into the right groups and you'll meet these people, and over time they will learn to trust you if you make that relationship about more than capital. Make it about trust, about friendship. That's how you get your first checks. It's like finding a few people who have already made it and getting them to see in yourself what you have, and that's kind of how you get your first checks in the door, and then make people money later on. Like, you're obviously going to lose and you're going to win. Just be honest about your losses. Don't try to cover them up. Don't lie. And hopefully, over 5-10 years of being a VC, you can return some capital at a multiple, and then those people will be with you forever. So in the meantime, just be honest and bang on that table. Don't stop, because eventually people will see how dedicated you are and want to help you.
Absolutely. The last question I want to ask you is, you're an early stage investor. You've seen a lot of companies, progress towards later stages, Series A, Series B, Series C, and they grow, maybe even exit. You've seen, Clearbanc's growth yourself. I want to ask you, in my personal journey, as well as in the journeys of a lot of my friends, the question of persist versus pivot comes up a lot, right? There's a lot of moments of like, oh no, we're screwed. Like there are things you see, signals you see from the market that refutes, or at least puts holes into your thesis. And so do you tend to believe that an entrepreneur should be relentless, whoever and whatever's being thrown at them, and just like ruthlessly believe in that initial thesis they had? Or
No.
do you think there are times to pivot? What do you think?
I think there are times to pivot and times to be ruthlessly in pursuit of your thesis. Slack was originally a gaming company, and this little in-chat communication engine they built ended up being their core thesis. It took Stuart Butterfield 10 years to do that, but look at the unbelievable success. All those pre-seed investors were probably not happy around the Series A, but by the time that company progressed, they're like, wow, this is one of the best deals we've ever done. So great founders will find ways to make things work, and they'll find great people to help execute on that vision. So then the question is like, when to persist and when to pivot, right? That's that's the big question. Strong initial validation. If your initial product or idea has received positive feedback, demonstrated market potential, you have clear paths to improvement. What are the identifiable and achievable ways to overcome these obstacles? If there aren't any, maybe you should pivot. Customer loyalty, those are some of the things you can look at to be like, okay, maybe I should persist and keep trying to make this happen. And when to pivot, market signals. negative market feedback. The customer base that you thought would be your customers are not rewarding you for the product you put into the market. Competitive pressure. If all of your competitors are outperforming you, right? Maybe that's a good sign to pivot. Internal insights. If you're collecting data and have analysis and it just shows that the current path is unsustainable or profitable, just being realistic with yourself and weighing the risks and pros and balancing that persist to pivot idiom is probably not easy, but I think that's how great companies are made. I think entrepreneurship is the hero's journey, right? You get knocked down, you're up, you get knocked down, you get back up and fight, or do you give up? Because you're fighting every day when you're an entrepreneur. And we operate a lot of these businesses that we invest in with the founders. Like, we understand the journey and we give it our best, and sometimes it works and sometimes it doesn't, and sometimes you have to pivot and sometimes you have to return investor capital. But ultimately, if you keep that core value that I believe, which is just being transparent and truthful throughout the whole journey, people respect you for it. We have a situation now with the founder, without saying names, where they can't operate in the niche that they're in anymore. They burned about half their balance sheet, and they've been transparent the whole way. And they might pivot, they might return capital, but whatever they do, I would definitely invest in them again, just because how they've handled it. Frankly, I think they've handled it like stand-up gentlemen. So I respect that.
Shane, one last thing that I always like to ask all my guests. Is there anything you'd like to add, any lessons, anything from your journey that you'd like to share that I've maybe skipped or glossed over?
It's a good question. The only way out is through. That's it.
There we go. That's our motto. Awesome. Thank you so much, Shane. Have a wonderful day. Thank you so much.